Good morning, traders. Welcome to this video on the euro dollar and pound dollar. My name is Chris from Elite Currency, and I'm going to take a look, of course, at the price charts. Specifically, first of all, the euro dollar, we've been following this very closely. The reversal here, then the five-wave pattern that started all the way here, 1, 2. We had a wave 3, followed by a 4 here actually, and then a 1, 2, 3, 4, 5 pattern within wave 5. Okay, so that's the situation. Then we said that right here, probably price will not bounce yet because the bullish price action, the momentum is too strong on Monday. We'll probably see a little bit of follow through first up into 121 area, whereas the 61.8 fib. So let me go back to the daily chart and let's put that fib on from here to here. And basically, we saw price making a very strong approach at the 50 fib at 120.25. So that's why I said on Monday it might break, and it did. It didn't quite get to the 61.8 fib with 7. It really was too much for price to reach that level exactly. It topped out at 120.80, which was the max it went. It then created a doji on the daily chart. So indeed, we got the rejection as expected. In fact, if you look at the 50-minute chart, what happened was a wave 1, 2, 3, 4, 5 within 5 of 5 actually. And this last push was the creating divergence, of course, on the AO, the Alstom oscillator, and the ECS MACD. You see, that's why this was not good to short. It was too strong. We had a flag pattern after that, which is what I was also saying, that if there's a flag pattern, this could be good for follow through to the upside. And you see that a flag pattern also respecting the 38.2 fib, or almost, yeah, let me correct this a little bit. Yeah, close to the 38.2 fib, going up to the minus 272 target right there. So we got the bounce in this zone. I don't know if there are any reversals traders out here, but it could be traded with, for instance, the 4-hour chart didn't show much, to be honest, here yet. This bearish candle, I think, was the first signal that could be reasonable to expect. Or these 3 bearish candles in a row, or these 3 bearish candles in a row seem decent targets. Then we had a break below the 20-MA, followed by a flag, and now a continuation. So we're seeing that retracement take place on this time frame. What is the bigger picture? So as expected, we got a strong push up, a V-Valley reversal. This is probably that 5 wave, as I mentioned, is probably wave A. So now we're expecting ABC down for wave B, back to the head and shoulders level, inverted head and shoulders level, left shoulder, head, right shoulder. So let's put the fib now on the bullish swing, because I think we are going to see a bearish correction of this bullish swing, and the bearish correction because this is a 5-wave up, and I don't think it's part of a wave C. I think it's part of a wave A. So we're going to see probably an ABC down, 3-wave pattern down most likely, back to the 61.8 fib, I suspect, and the head and shoulders level at around 118.50. So that's what we're looking for now, is a drop to the 23 and the 38, followed by a bounce up, and then a move down again to the 61.8 fib, and then a bounce up. Okay, so that's my view at this moment, and then a correction, and then a bounce up again. This is the expected price path for the moment, at this point at least. Seems to that this particular path has the best probability of playing out. But of course, if things change and that can happen, then we'll do an update next week, Monday, of course, as always. So at this moment, I think there's space down to 119.40, so I do think there will be more downside in part of this wave A, and then up, and then down for wave C once again. So the break of the 21 EMA might be one way of looking at it, because you can see the 20 EMA has held very nicely in this run up. The 20 EMA held very nicely in this run down. I think the 20 EMA could be a little bit choppier because we're going to get a correction. So I think that price might not break as fluently. So I think this break right away doesn't make sense because we're running into 120 and 23.6 fib plus these tops. That should provide a bounce, or could provide a bounce. I don't think it makes sense to trade into that support. So I do think that there will be some bounce here, a minor bounce, but then if it breaks again the second time, then it starts to make more sense, because then from an intraday perspective, I think, or intra-week perspective, there's that space, expected space down to the 38.2 fib, and I would take profit at the 38.2 fib because there a bigger ABC bounce could take place as part of a B pattern. Okay. Then of course expecting that downside to the 61.8 fib. So personally, I'm interested in shorting it, but a little bit later, after it bounces at 120, maybe at 120.20 or 120.25, would that move down to 119.36? Let's take a look at the 1 hour chart. You can see the 144 EMA as well lining up with these tops. So it might move inch those 10 pips lower still, or 10 or 20 pips lower. That's not really worth it in my view. Maybe on a 5-minute chart, I wouldn't do that personally, but it could be still worth it maybe if it makes yeah, maybe a retracement here into 120.20, 120.15 for that small move. I mean, it's really small, but I guess in theory possible. And let's take a look at the 5-minute chart very quickly. Yeah, this could be a wave 4 and down for wave 5. That's certainly possible. Let's put the fib from here to here. 38.2 fib bounce happened already, or from here to here. Yeah, this 38.2 fib might hold. Anyhow, back, that's a small push. So what I suspect is that if it makes that push down, then some kind of correction into the 21 EMA zone. I'm not sure if it's going to get, I don't think it's going to go that deep. I suspect that it would only go up to 120.16 or 120.25 into the 21 EMA zone and then make that dash down. That's what I'm expecting at this moment, at least. So let's see if that plays out. I don't have much to add actually, but the pattern here followed by the break would confirm it, and of course a candlestick pattern here would confirm it too. That's how I would keep an eye on this. Pound USD. Let's see. We were talking about the bullish bounce here. The breakout here didn't happen, but we got the bullish bounce here. Then on Monday, we spoke about this momentum and that I would wait for some kind of correction. I forgot which time frame, but it really didn't happen. It just blasted, to be honest, to the upside. On the hourly chart, it just kept pushing, and that can happen sometimes, of course, if you're in a momentum. And from that point of view, on the hourly chart at least, this was the deep pullback to grab, and if you missed that, it just kept moving up to with 7 without really any 1 hour pullback. So that can happen if you miss this, if you miss this breakout, if you miss this bounce, then on an hourly chart it can be a bit tricky sometimes. Maybe this momentum, but I think we saw the video, we made the video a bit all the way up in here, 139ish. So it was just a little bit too late when we made the video. The momentum had to push too far. These 3 candles after the bounce, I think, could still be a great moment for an entry potentially, but up in here was a little bit risky and just broke through his 6, broke through his 5 up to 6, right up to 7 without pausing. So that's a little bit tricky, maybe on a lower time frame, but I think we were looking at, I think I talked about the 5-minute chart, but forgive me if I'm wrong about that. I think I did say, I hope I'm right on this, to be honest, but I think the price was up in here. Let's see, 19th here, I think, and yeah, there was still a flag pattern pullback. You see, 5-minute chart did offer those pullbacks into the 20 MA, and that could be a great way of trading that momentum, by the way, as well. Anyhow, price moved up, made a retracement, hit 140. So what's next? Let's take a look at this time frame, and it's a bit tricky because it reached the resistance target that we had in mind already. So from that point of view, one of the main targets have been hit. So it could be that this ABC is completed. We talked about this already before, that this double bottom at the double bottom is probably creating an ABC pattern. So the wave C at such an extent could easily be finished, but it might also, because of the strong push up, easily create a wave 5 of C, one push higher. So what we need to do, I think, is identify this as a wave 1, or if this is a wave 1 and this is a wave 2 and this is a wave 3, we need to put the fib on the wave 3 and look at the Fibonacci levels to guesstimate whether this is still a wave 4. And so far, we can say that it could easily still be a wave 4. With the 21 EMA still bullishly angled, with price moving away so much from the 21 EMA, with all the moving averages aligned actually, with price being above the 38.2 fib. This could easily still be a wave 4 pattern. So if we get a bull flag pattern like this, that would be ideal, and we should see a break and continuation above 140, maybe even up to the WIS 8 and the 141.70 level and the minus 61.8 target. But this is not a bull flag as yet. This particular drop is not a flag pattern. It is maybe the start, one swing of that. So we need to see, I think, 3 swings at least before I would consider that a flag. It could still be worth trading it here. It's a little bit riskier because of the fact that there's no confirmation of a pattern, only support levels. But could be a riskier way of trading it, and I think there's nothing wrong with that if the stop loss is set maybe below the 50 fib or even below the tops of wave 1 should be sufficient and should give a decent reward to risk ratio. I think maybe the wider stop loss is of course safer because that's the real invalidation level, not the 50 fib actually. So although it's less, 50 fib is, if price does break below the 50 fib, then it's usually not a wave 4, but it's not the full-fledged invalidation spot. So anything else to mention? Yeah, so that wave C could go higher to the minus 61.8 target there, for instance, minus 272 target, and complete that wave C, which is where I would expect a bearish bounce. What if price, why do I expect a bearish bounce there, by the way? Because this is probably wave A, this is an ABC for B, A. I think that this is a ABC for B, and we should see a C down. Or a 1, 2, 3, by the way, I don't know. We'll have to see. That's not so relevant now. But what if price breaks through the 21 EMA? Then I would, if there's strong momentum, and it's a flag after that, and it breaks that flag, well then, in that case, I believe it's good to get out of any longs and look for short setups, in fact, as then in that case, the wave C looks over. That's also possible. And we might be looking at an ABC down or a 1, 2, 3 pattern down. So if we get strong push below the 21 EMA zone and the 50, followed by flag and break, that changes the entire perspective. All right, that's my 2 cents. It's my best analysis I can give. So hope that helps. In any case, trade safe, and of course, see you next week. And if you're interested, by the way, in knowing more about my methods, why I attach probabilities to the, to these EMAs and fractals and fibs and patterns in general, my SWAT course explains everything. Simple wave analysis and trading is the abbreviation SWAT, Simple Wave Analysis and Trading. And there's an ebook if you want to start in a more cautious way for €24.95, or the course itself brings you everything in video format, indicators, templates, PDFs, everything is included. A lot of material is there, so feel free to join as a member. See you all very soon. Cheers.